0.7 attorney there. Hey, good morning. It's 8:38 here, 22 before 9. Checking to find out what's going on with money up on Wall Street this morning. After a day off yesterday, we're kind of feeling a case of the blahs this morning, for lack of a better term. Let's go downtown and see if we can figure out what's causing it. Phillip Statler is on the line from Statler Financial Services in downtown Sebring. Hey, good morning, Phillip. How are you?
Good morning, Dave. Hey, it was a little foggy. Had to swim in this morning. It was a little like pea soup out there this morning.
Boy, it was. A friend of mine on Facebook and I were chatting back and forth, and we kind of came to the conclusion that with all the newfangled cars and the automatic headlights, I wonder if some folks don't even realize you can turn your low beams on manually in the fog. Looking at the people going by on 27 in front of our building kind of makes you wonder if they've forgotten they actually have a manual switch on that thing, right?
Yeah, we get so dependent upon technology and what that technology can do for us. It hurts us.
Absolutely. And it's on days like today, it's one of those days where, yeah, that automatic sensor might very well see enough light to turn your headlights off. But by gosh, those white and gray colored cars, they come out of a fog bank. And even if you're really paying close attention, you just cannot see the doggone thing. So people, turn your low beams on manually. There is a switch out there somewhere, I'll guarantee you, right?
That's right. Yep. Just got to figure out where it's at and turn it on. So, hey, yesterday was, we don't have to say it wasn't a down day. It wasn't an up day. It wasn't anything day because the markets were all closed yesterday.
That was kind of weird. It didn't feel like a holiday with the kids around here in school, but no mail, no trading, no futures trading once we closed in the morning. And I'm sitting here looking at Friday's close, which was up. But then again, we've had 3 days to think about it, and looks like the mood about the Chinese trade talks is kind of turned sour. And as God is my witness, I've looked through every news source I can find, and I don't know why all of a sudden everybody's getting cynical.
Yeah, I don't either, but you're right. Everything that I'm seeing has kind of got the same tone to it. There seems to be this cynicism as, when they come back to Washington and they start to talk again, that there's some headwinds there that we're not really figuring out what it is, but there seems to be some headwinds there somewhere that other people know about that they're not telling us.
Yeah, it's weird. Normally, the smart money, at the very least, something leaks out as to why folks are trading downward, but we don't really know why today. It's a strange one. Couple of bits of good news came out. Not a lot of earnings reports out, but boy, Walmart kicked butt, and that's got to make us feel at least not quite as bad on that retail sales figure from the fourth quarter that we had.
Well, that's true. Walmart is a good bellwether because they do so much business. And they did come in and beat by about 8 cents a share. Revenue also topped street forecast. And one of the main things we look at when we start talking about retail is same store sales comparisons. And Walmart did well. They came in at 4.2%. The consensus was 3.2%, so 1% better than was expected. And they bumped their quarterly dividend by a penny a share. So they're trading up this morning about 2.7%.
I suspect that probably is helping the Dow figure because that's one of the better of the three figures we've got in terms of the amount that we're losing. The thing that really caught my eye with Walmart, because they've been working so hard to take on Amazon and all the internet revenue companies, a 43% increase in online sales in the fourth quarter. Brick and mortar stores aren't happy to see that, but that definitely indicates that some of their plans are actually working out on the online side of the Walmart enterprise as well.
Well, it is, and I think that they're working diligently on trying to compete against Amazon. And so, I can't remember how long or what it took to get free shipping, but I think more and more companies are realizing that that's got to be part of the mix, is that free shipping. And so, I think Walmart got on that bandwagon fairly early, and so I think that probably contributed to it too. And the ability to pick up in-store sales. So, you can order it now and go pick it up online. At the store.
I was going to say one of the indications that they're getting so important in the online stuff is that little sitting area they've got, at least at the Walmart on the in Sebring, where you can lounge in a chair and get a key to a locker where your pickup at the store order that you did online is sitting in a locker. I haven't used it yet, but I think that's the mechanics. It's almost like an airport locker set up there. but you can drop by. It's already waiting for you in a locker at the store, which is really kind of a cool concept when you think about it.
Well, yeah, it is. And if they can get it there, from a time standpoint, as fast as Amazon, then hey, the only difference is you got to go get it, which is not a big inconvenience here, but it's a little bit of an inconvenience for some folks.
And snowbird season parking is. As a guy that looks for the handicapped spaces for my wife, I kind of like home delivery at times. One other household name that hits, especially since they're a signature sponsor of the 12 Hours of Sebring, Advance Auto Parts reported, huh?
Yeah, they did. Advanced Auto Parts came in, and just like Walmart, they did do better than expected. They beat expectations by 4 cents a share. Revenue was basically in line with what the forecast was. But here's the metric that they missed on, and that's same store sales. Came in about 0.2% below what was expected. And so, obviously they're kind of paying the price for that. They're down $1.31, which is about 0.75% this morning.
Oh boy. Well, we're batting 500 on the household name reports we got this morning. You were telling me before we went on the air that your analyst is a chart geek, much more advanced at that than I am. And he says that he kind of sees a wall for the Standard & Poor's as far as the market now that we're done with the bulk of earnings season, huh?
Well, they do, and he's not the only one. I've seen several reports now that the technical guys are saying that there's a major resistance level there at 2790 on the S&P 500, and so we're butting up close to that right now. And so a lot of the analysts are expecting that we're going to see 2 to 4 weeks now of downtrending in the S&P 500, with kind of a price target somewhere around 25.50 as kind of the floor that they see it going down to.
In terms of panic down the line, one got to say that once you finish up earnings season, the markets have a tendency to test a new range and see where it's at. For reference's sake, we closed Friday at 27.75 and change, so about 15 points of headroom until your analysts say that we're looking at a wall, and they're saying we could actually test a 200-point drop, huh?
Yeah, that's what they're saying. I mean, we've had a 400-point increase since the low in December, so they're thinking we could give half that back in this trying to find the floor.
And once again, looking for a range trade in after every earnings season kind of resets the multiples. It's not really something to be afraid of, but it definitely makes people that are looking at retiring over the next 3 years, when you look at a 200-point range to trade in, kind of makes you sit back and say, maybe I ought to think stability, right?
Exactly. That's, we preach on here. We need to have exit strategies. And if you're getting close to retirement, then you need to make sure that you've got a good part of your portfolio in things that you can't lose money in. And so, that's really what we do, is help folks create income plans and protect their retirement, so that they don't lose as much money in the markets. And we're always going to have that possibility of losing money in the markets, but we want to limit that as much as possible.
Understood. And if you're 35 and 40 years old, a 200-point trading range on the S&P, that's like 8%. That's nothing frightening. It gives you buying opportunities. But if you're 55 and 60 years old, you start looking at an 8% trading range. That's kind of the difference between a good retirement and an, oh gosh, what am I going to do now retirement, right?
Well, it's not so much that, Dave, is what is it indicating, right? If I start sliding 8%, how much more am I going to slide back to 20% or 30% like we did in 2008 and like we did back in 2000? Those are the things that we need to be really cognizant of as we get close to retirement. And what's close? I'm going to say 10 years. And if you're 10 years out from retirement, we need to be a little bit more careful than the 20, 30, 40-year-old.
Understood. And as we've been saying all along, we're kind of overdue for one of those substantial recessions that could last a little while, and that's a bad time to look at timing your retirement. So planning is always a good idea, and always having that contingency plan available when you see the signs, right?
Well, that's right. Don't misconstrue this 10% correction that we've seen as heading into the bear market, because only the only index that we've really seen head into the bear market has been the NASDAQ, and it's back out now. So, but the other indexes have not followed suit. So there's still the possibility that could happen.
Bottom line is like predicting the weather. Being prepared for any kind of weather is a good idea. Being prepared for any market eventuality is also a good idea, because we can take a pretty good guess, but we ain't very often 100% right, are we?
That's right. Think of the weatherman, just like you said. I mean, how often are they 100% right? The same way with the stock market, it really can be an unpredictable animal.
Absolutely. So we got a 3-day weekend under our belts, and we're going to start throwing real money around this morning. Things looked halfway optimistic yesterday morning. Everything was up on Friday, 45 minutes before the real money gets thrown around. Phillip, what are we doing this morning now?
Well, the three major indexes are giving us a little bit of red ink this morning. So the Dow's down about 0.25%, 63 bucks. The S&P 500 is down about 1/3%, 850. And the NASDAQ's down about 1/3%, $21. Gold and silver, gold's really getting a big push this morning. They're up almost 1% to $1,334 an ounce. Silver's up about 1/3% at $15.79 an ounce. And then crude oil is still back up 56, is at 56.05 a barrel right now.
A little lower than it was yesterday, but up from last night. So it's still trending upward, isn't it?
Yeah, it is. And I noticed when I was driving in this morning that it looks to me like gas prices have gained about 10 to 15 cents since the weekend.
I'm so glad my new car gets 34 miles a gallon. I can't stand it. That's called an exit strategy, if you want to know the truth. Overseas markets. Looks like China may know something we don't. They're traded off by about 0.5% this morning. Europe also generally trading down. Somebody want to find some advice to stabilize your retirement fund and implement some of the advice we were talking about. Phillip, how would somebody make an appointment with you on the phone?
Dave, they can give us a call at 382-0037. They can follow us at Facebook, which is Statler Financial Services, where we repost a lot of our radio stuff right there on Facebook. You can catch up with us there. And then every weekend, join us for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty, and back here tomorrow morning after we find out what really happens as the market opens up after a long weekend. Fair enough?
Fair enough, Dave. We got to really look and see where we end up. You have a great day, and I will talk to you in the morning.